Greetings from the beautiful coast of Sicily. Rates are slightly worse to start this week than they were last week. So what happened last week? Well, we had the Federal Reserve and they cut interest rates. So we had the Fed interest rate decision and press conference on Wednesday. That's important. The Fed cut the Fed funds rate by 0.25%. Guess what? That was expected. No shock. In fact, Wall Street and the financial markets had already priced that 0.25% cut in. That was not something that was going to impact rates on Wednesday. But additionally, we received an update on something we call the dot plot, which is each Fed member's prediction of where interest rates will go over the next 2 years. The dot plot pointed towards additional rate cuts, as many as 2 more before the end of 2025. All that was positive for rates. But then Fed Chair Powell opened his mouth and fired a warning shot that this particular interest rate cut was essentially for risk management and that the dot plot doesn't represent a new Fed strategy. So he kind of cut the legs out from those who think rates should continue down. The dot plot helped rates, but then the chairman's comments hurt them and continue to hurt them throughout the week, effectively increasing our interest rates in mortgages by about 0.25% higher to end the week last week, and therefore started this week, than the week before. So what's going to happen this week? Well, this week is full of Fed speakers. We will hear from, it seems like, every Fed speaker sometime throughout this week. We'll also get some housing data. Monday and Tuesday are quiet. Wednesday, new home sales. Thursday, GDP and existing home sales. And then Friday's a really important one because we get the PCE, personal consumption expenditures. Remember, this is one of the primary inflationary reports that the Fed and the markets watch. So where are we right now? Currently, according to Mortgage News Daily, our 30 years around 6.35%, our 15 years around 5.90%, and our FHA 30 years at 6.03%. Where are you? Where's your interest rate? You need to be thinking about refinancing. I promise you, we are working hard. Even I am from here in Sicily, and the rest of the team is, on reaching out to all the people who either need to pull the trigger on a refinance or at least need to start thinking about it. If you think you might be one of those people, if you're 6.5% or greater, especially if you're in the 7%, you need to pick up the phone, give us a call, and let's figure out when is the right time to pull the trigger on your finance or your refinance. Have a great week, and I'll update you again next Monday.